So what if there was a way to build startups that was faster, more successful, and, a whole lot less risky? Well, today we're going to explore a model that promises to do just that, the Venture Studio. We're going to break down how it works and see it in action with a really game-changing case study.
All right, here's the plan for this explainer. We'll kick things off with a big challenge facing Vietnam's startup scene. Then we'll introduce the Venture Studio as the solution, really unpack how it works, and then dive deep into a real-world case study with the Invention Lab and its breakout success, OKXE.
Okay, so our story starts in Vietnam, which is one of Southeast Asia's most exciting economies. But to really get why a new way of building companies is taking off, we first have to understand the problem it was designed to fix.
So after this huge global investment boom back in 2021, Vietnam's startup scene, well, it hit a wall. Funding dropped by a staggering 56% in just 1 year. This so-called capital winter made money way harder to find and forced investors to be super selective.
You see, in this new, more cautious world, just having a good idea isn't enough anymore, not even close. Investors want to see proof that a startup can actually deliver. And this creates this massive gap for early-stage founders who need more than just a check. They need real, hands-on help to turn their vision into a business.
And this is exactly where the Venture Studio model comes in and just changes the whole game. It's a totally different approach to building companies, and it's specifically designed to bridge that gap between a great idea and a real, thriving business.
To put it simply, a venture studio doesn't just invest in companies, it actively builds them right from the ground up. So think of it less like a bank and more like a co-founder who comes with a full team of experts, ready to roll from day one.
Now, what makes the Venture Studio so powerful is how it brings 3 key roles together under one roof. It acts as the entrepreneur, dreaming up and testing new ideas. It's the operator, with its own in-house teams to actually build the product. And of course, it's the investor, providing the cash. It's a complete system for building companies from scratch.
So, how does this company factory actually work, right? Let's get into the mechanics of the Venture Studio model and see how it turns the usually chaotic process of building a startup into this well-oiled machine.
This model isn't brand new. It's actually evolved over 3 distinct waves. It started with pioneers like Ideation Lab way back in the 90s. Then you had the early adopters like BetaWorks, who helped build huge successes like Jiffy. And now, we're in a phase of global expansion with over 900 specialized studios all around the world.
So, what's the real difference between a venture studio and, say, an accelerator or a VC? Well, it's huge. An accelerator is kind of like a temporary coach, and a VC is just an investor. But a venture studio, it's a true co-founder. They are in the trenches from day one, before the company even officially exists, and they take a really significant chunk of equity because they are literally building the business right alongside the founders.
And the model is super flexible. Studios come in all different flavors. You have some that are laser-focused on one industry, like fintech. You've got corporate innovation arms, like P&G Ventures. And you even have studios that specialize in spinning out amazing research from universities into real companies. Venture studios follow this really clear, repeatable process that's kind of like a startup assembly line. It all starts with a raw idea. That idea then gets put through the ringer. It's rigorously tested and refined. If it makes it through, an in-house team builds the product, and then it's launched as its own independent company, ready to go. So, does this whole structured approach actually pay off? Well, the numbers really speak for themselves. Studio-built startups get to their first major funding round, their Series A, in just 25 months. That is less than half the time it takes a traditional startup. And what's maybe even more impressive is that their success rate is way higher. A full 72% of ventures backed by a studio make it to Series A compared to just 42% of traditional startups. It just massively de-risks the whole journey by giving them experienced teams and a proven process right from the start.
Okay, so that's the theory. But what does a venture studio actually look like in the wild? Let's head back to Vietnam and check out the Invention Lab. They're a venture studio with a really unique model that's connecting the tech powerhouse of South Korea with the super high-growth market of Vietnam.
Their core strategy is basically to act as a bridge. They find these powerful technologies and business models in Korea, and then they adapt them for the specific needs and opportunities inside Vietnam's booming market. And in doing that, they create these powerful new companies.
The Invention Lab really brings a powerful mix to the table. They have deep roots in the Vietnamese market, a proven record of building successful cross-border companies, a super rigorous, data-driven way of testing their ideas, and, of course, the ability to support a company from its very first day to its first big win.
And the proof is always in the pudding. So let's look at one of the Invention Lab's biggest success stories, a company called OKXE that has totally transformed its market.
Okay, try to picture a country with over 65 million motorcycles. That's Vietnam. But the market for used bikes was just a mess. It was chaotic, totally informal, and it was held back by one single massive problem: a complete and total lack of trust.
So OKXE came up with this brilliant hybrid model that tackled the trust issue head-on. Online, they built a huge digital marketplace, but the real genius was what they did offline. They created these physical OMO stations where motorcycles could be inspected and verified, creating the trust that the market was desperately missing.
And the result? Absolutely explosive growth. In a ridiculously short amount of time, OKXE captured an incredible 14% of the entire national used motorcycle market in Vietnam. Just let that sink in for a second. That's huge.
The success of OKXE is just such a powerful example of what the venture studio model can do. So, what does this all mean for the future of entrepreneurship, not just in Vietnam, but in emerging markets all over the world?
At the end of the day, the venture studio model gives us a repeatable, de-risked way to build strong, resilient companies. By taming the chaos of a startup's early days, it basically creates an engine for innovation that can power the next wave of great companies.
So as investors around the world stay cautious with their money, the venture studio model offers a really compelling alternative. Is this the future of how companies are built? Are we actually looking at the blueprint for how the world's next great companies will be born? Only time will tell.